A massive bull market is taking place in front of our eyes. Paul Tudor Jones, a famous American hedge fund manager and philanthropist, once said, "There is always a bull market and bear market going on simultaneously in the world at any given point of time." People often get influenced by news and headlines and lose perspective. The saying reminds us that both positive and negative market trends exist simultaneously. It's very challenging to see both the sides, but we need to remember that this is how the market functions. Investors living through the countless bull and bear market often appreciate the power of this exceptional piece of wisdom in hindsight. It is important to remain abreast of events and news, but not to take investment decisions based solely on the broad market trends. Today, for example, while the world is seemingly falling apart in front of our eyes, a ferocious bull market is underway in some or the other part of the world. So moving forward, let us talk about the Indian GDP and Apple. Let's go back in time, say about 30 years, when India's back was against the wall, facing a gigantic balance of payments crisis, and the Indian GDP was about $280 billion. The market cap of the equity market was less than that. 20 years later, the Indian GDP was $1.8 trillion. 30 years later, from 1992, GDP now is $3.5 trillion. And the market cap of the equity market has kept pace. I'll come back to this in a second. Please hold the thought. Now let us take a quick detour to Apple. Apple was listed in 1980s, and for the first 20 years after its listing, it had made no returns for its shareholders. In 1992, it had a market cap of $5.2 billion, and in 2002, it had a market cap of $4.2 billion. Apple's share effectively went nowhere in that time, but the company gestated and laid strong foundation in those 22 years. And then the story kicked off. If you were invested in Apple during that time, then you were one of the most frustrated investors in the market. And now comes the bigger killer point. It took Apple 38 years to become a $1 trillion company. Within 2 years after that, it was a $2 trillion company in August 2020. And then it just took 2 more years to become a $3 trillion company. Think about this for a minute. Don't you think so? It's mind-blowing. The key takeaway in this is that when things take off, the curve becomes exponential thanks to compounding. Now let us come back to India. It has taken a long time for the Indian GDP to hit $3.5 trillion. But given the power of compounding and the fact that India has become more mature now, it will take India less than a decade to double its GDP to $7 trillion. And there is literally no force on the planet that can stop this from happening. The risk to my forecast is that this doubling in the GDP happens faster than a decade. Now let us talk about the stock returns and GDP growth. Research indicates that the highest CAGR in equity returns occurs when a country's GDP doubles from around $3 trillion. For example, the US GDP went from $3 trillion in 1982 to $10 trillion in 2000, multiplying equity returns and giving rise to giants like Peter Lynch and Fidelity's. India, with the stronger fundamentals than what US had, has a promising future. A notable statistic. While the US's household debt was 45% of GDP in 1982 and is 65% now, India is only 14% at $3.5 trillion GDP. India's prime growth phase is imminent. Let us talk about how India can lead the world now. While the global market faces debt crisis, lack of leadership, and consumer stress, India shines differently. With digital-savvy households, rapid infrastructure growth, and burgeoning credit-seeking population, India's zeal for growth is evident. Now it brings all of us to this question: can India take the world out of the malaise? The answer is why not? Before the East India Company came to the Indian shores, 45% of the global GDP came out of India. India's share of the global GDP is going to grow faster than any other part of the world, and the stock returns will most likely reflect that. For more informative content of this sort, do reach out to Savat.